Hey fellow stock guardians, happy Thursday, August 5th, 2021. I'm Hoda, a stock CEO, reporting to you from a green stock market. Today I covered how the estimates for the upcoming employment report impacted the market. I also took a dive into gene editing stocks, particularly Editas and Intellia, that were up significantly. Finally, I dug into why Fiverr shares dropped despite a good earnings. Let's get right into it. The market indices ended the day in the green. The S&P reached a new record high today despite a lack of big news to move the market. Investors are awaiting the Fed's employment report for July on Friday, which will impact the upcoming decisions on monetary policy. Analysts are torn on whether it will dip lower or skyrocket, with estimates ranging between 350,000 to 1.2 million new jobs creation. However, today's new jobless claims report hit a pandemic-era low, and that helped boost the market in anticipation of tomorrow's employment report. Before we dive into the winners and losers, let me thank you for being a stock guardian. Our team at Stock Guard appreciates you watching, listening to, and reading the daily roll episodes. And more importantly, we thank you for using the Stock Guard platform in your research. Thank you for being a stock guardian. If you aren't a user yet, I'd like to invite you to try now. First, hit the like button, subscribe to the show, and then create a free account on stockguard.io. Thanks for becoming a new stock guardian. Welcome to the community. Today, I noticed multiple gene editing stocks on a StockGuard's winners list and my own portfolio. When there is positive news and developments in the field from clinical trials from one or two companies in the space, it pushes almost all stocks in that industry upward with excitement. Today's good news came from Editas Medicine, ticker EDIT, and Intellia Therapeutics, ticker NTLA, that released earnings report with positive developments in their R&D and trial results. Editas announced its first pediatric and adult high-dose cohorts for its Edit 101 Brilliance trial in its earnings report. This is a CRISPR technology treatment for an inherited disease in human eyes. Also, the company's sickle cell disease trial is on track to be started this year. Investors reacted positively to this news, brushing off the disappointing financial numbers that came through the earnings report. From the company's StockGuard, we know it's unprofitable and the losses keeps getting bigger. Intellia also brought good news to the table in its new earnings report. The company has been making progress with applying CRISPR therapy in vivo, or in other words, to living patients, not in dishes and lab. Intellia announced that it now has a proof of concept for the technology. We covered some of this news as it broke in the past episodes. Generally, when it comes to biotech companies like Edit or NTLA, being involved in clinical trials means limited to no revenue and profit. What matters is cash. Both companies have solid cash reserves, which we can see that in their cash availability section on their stock cards. I own shares of both, have added to them several times, and plan to hold them for now. One of the challenges with picking gene editing stocks is the high volatility that comes with clinical trial news. Some good news can surge the stock high up, while some bad news can have the exact opposite effect. Meanwhile, the company is precisely the same company it was before the news. One way to deal with this volatility is to focus on ETFs in the same space. For example, take a look at ARKG, the Genomic Focused ETF by ARK Invest on StockGuard. Its top 25 holdings include the majority of gene editing stocks that you would want to have on your radar. Also, as usual, you can type in gene editing in the search bar and get the full list of gene editing stocks to start your research. I'll leave a link to the gene editing list of stocks in the show notes. On the loser side, I noticed Fiverr, ticker FVRR. The company released its earnings report late last night. Despite great numbers, the stock dropped immediately on open today and finished out the session with a 24% drop. According to the report, revenue grew 60% year over year as all metrics surpassed pre-pandemic growth level. Active buyers grew 43% compared to this month's last year, which was in the middle of the pandemic. The stock dropped because of the company's outlook for the rest of the year. The CEO cited people returning to the outside world from lockdowns as a factor. Fiverr expects to see a year-over-year revenue growth of 30 to 38% in the upcoming third quarter, which is nearly half of this quarter's result. Why did investors expect better results? The drop is quite expected. What matters is that companies' ability to keep growing from here and use the user base it acquired during the pandemic to engage and spend more on the platform. I own shares of Fiverr, and if the drop continues, I may be a buyer once again. Before we wrap up, you may have noticed the excitement in my voice today. That's because two of my favorite stock market analysts and diligent stock researchers, Brian Ferraldi and Brian Stoffel, joined the community of Stockcard portfolio publishers. Their mission is to spread the knowledge people need for financial wellness. That mission lines up with our goals at Stockcard quite well. I highly recommend visiting the Stock Picks page and look up Brian Ferraldi and Brian Stoffel and their portfolios live on our website. Brian Ferraldi runs two, a quality checklist portfolio and an interesting anti-portfolio, which consists of the stock he reviews but doesn't think quite stack up. Brian Stoffel also has two portfolios with same strategy, fragile portfolio and anti-fragile portfolio. You can always find our partner investors' portfolios by searching their name on the Stock Picks page left-hand side, and don't forget to follow these 4 new portfolios by Brian Ferraldi and Brian Stoffel on Stockcard's Stock Picks page to get notified of their future additions. That's it for today. If you haven't already done so, please give Stockcard a try, research as many stocks and ETFs as you want, and consider following a few successful investors by visiting the Stock Picks page on the Stockcard platform. Don't forget to sign up for a 14-day free trial with promo code ROLLWITHOURCEO, all lowercase and in one word. And like, subscribe, and share these daily market recap reports with your fellow investors. Come back tomorrow for another episode. I'll see you then.